A level 2 alert for the U.S. stock market. I'm Rich Paz for Critical Point. It's July 2nd, 10:38 a.m. Eastern Time. I have a couple of price levels I'm going to give you in a minute here. In fact, I'll give them to you right now. If we see trade above the July 1 high in the S&P 500 cash at 5479.55, and I want to make sure we keep the futures in line as well. So we need the futures at about the same time to trade above, and let me get the price level. That would be on July 1, 2, would be 55.41 for the E-mini September S&P 500 futures. If we can get violation of those two price levels, if it does it today, the model's saying it ought to be a level 4 intra-week upswing into tomorrow. But we also need to consider that if it doesn't do it tomorrow, that's okay, and it may even take another day. But when it does it, we should consider that we also have a level 3 bottom in, and the model's saying there's 80 or 90% probability to bottom now, but we have to allow the leftover probability that it bottoms in the next couple of days. It could still take a little bit of time. It does not look like it's going to bottom next week, meaning, or early next week, meaning some downside. I think it bottoms this week, and it's a matter, is it today or is it on into Friday, and of course allow for the holiday on Thursday, okay? Now, with the level 3 bottom, however, we also have to consider it's bottoming for level 2. The level 2 bottom occurs about 4, 5, 6 times a year, second most important kind of bottom. And every other one of those, but sometimes the market throws a curveball and throws in an additional level 2, but it creates a level 1 bottom, the most important kind of bottom during a year and during a long-term bull-bear market, and we also use it to help us time long-term bull-bear markets. That level 1 bottom occurs about 2 to 3 times a year, okay? Well, we're not getting a level 1 right now, all right? We're getting a level 2 bottom, and the market should rally into a level 2 top and pull back in August, probably to a level 1 bottom. There could be more serious selling in August, but the point is the level 2 should now be up into August. So we think this is occurring. We think we've got the probability there, and yet we can be just a few days early, okay? There could be one more level 4 downswing, something like that. And I realize there's other factors, the market, so some people say it's all overbought, going to come down. But I think we really have to consider there's a good chance this market's now going higher into August. Now, a few minutes ago, we heard from Chairman Powell, who basically made comments that, hey, still need more time, still need to just hold interest rates there, but continue our little war on inflation. And I realize I can disappoint some people, make them nervous. The Fed's going to wait too long because the economy is now slowing at a faster pace. But we're not picking up any red alerts and flash sell signals or anything like that. The economy is still just getting back to a normal-styled economy and a normal bull market. So, bottom line, there's always risk. There's always things that can go wrong. But the best forecast, this market is probably bottoming now in the next few days. So I think you can go shopping, but I think if you're looking for something to get off the fence and just dive in, I think if it trades above those two price levels I gave you, or above the July 1 daily high for all the major indexes like Dow Jones, NASDAQ, the S&P 500, maybe there's some others, I think you have to consider it's on its way higher into August. Maybe they'll have to get some backfilling, a few more problems. Now, let me talk about the gap on the futures. You can see as of this week, the futures market tried to push it down to the gap in the futures. That gap is futures only, and it was mechanical. It's mathematical. It's just rolling over from rolling over from the June to the September, but the September is a higher price because of the cost of interest rates. So it's just mathematics of how they calculate some valuation of futures. That gap can be meaningless to Wall Street in general, but it's probably meaningful to some futures traders, and there may be some cash traders that will consider it. It could be self-fulfilling prophecy to pull it down, and so I think there is the downside potential of 50 to 70 points lower in the S&P 500, may only be 30 points because they may just dip it into the gap and put it up, but as of this morning, they brought it back towards the edge of that gap, and are actually buying it a little bit. I don't think they really want to drive it down into that gap, but they may get away with it because a lot of traders are trying to go off and have a July 4th holiday, okay? So that could make the market a little more vulnerable, a little more game playing of stuff that really doesn't matter, okay? So there is that downside potential. And I'll warn you, we got 50 or 70 points in the future, so therefore we got 50 or 70 points in the actual cash market for the S&P 500. But I think what you need to consider is that it doesn't have to do that, that may very well be the worst case scenario here for the rest of this month, that this market is moving higher to record highs into August, and then maybe we can get more serious about a more sizable drop in August and again in October and maybe even in September. But right at the moment, it looks like we're ready for another little leg higher here of the 2024 bull market, and I really don't, and I'll talk about upside potential later, but right at the moment, I'm giving you this alert that, and a warning. I'll give you a warning. I think you can go shopping here, but we don't have enough evidence yet that it's bottom, but it's leaning that way. But I'll go ahead and give you an alert that if it takes out those price levels, the model's going to gamble on it and say, boom, take it, all right? And so I may not alert you again to remind you it's doing that. Write those price levels down, watch it. If it trades above it today on into the end of the week, I think you got to give it a chance this is going to run higher. Now that seasonal that the Stock Traders Almanac was talking about, the market normally on average moves up from June 26th to July 12th. And I said, I don't think it can work right at the start at least. And I've been right. But I think now what the model's saying is now those seasonal people can be right. This thing could rally into July 12th, maybe give us a level 3 pullback, and then it's just going to rally again, however, with or without the seasonals, in my opinion. I think it's got to push higher into August before we get any kind of significant selling. Keep an eye on those interest rates. Keep an eye on the Federal Reserve inflation. But keep an eye on the fact that businesses are making money, but watch out for any kind of, if you see a string of companies that are saying, oh, we're not making money, well, that could make people nervous. I think the upside is a little less than what we had earlier in the year when they decide to buy. They're going to be a little more careful. But nevertheless, I think we got record highs coming. I think this is it. This is our level 3 bottom and level 2 bottom. Past results are not necessarily indicative of future results. Have a great day. Thank you.